Futures and options on futures trading involve substantial risk and is not a suitable investment for all types of investors. Past results are not necessarily indicative of future results. When I use the word I in this video, it refers to what I teach in my charting course or what I author in my twice daily oral and written updates. Prices shown on charts and quote boards are in real time and take into account all known activity up to this point in time. And if you'd like to read more of this disclaimer, simply hit the pause key on your video player. Good weekend. Ira Epstein with your financial market update for this weekend version on October 6, 2017. We're about 3:45 p.m. Central Daylight Time. This is pretty close to where the markets are actually going to settle. I looked at the futures markets before I came on. A bit of a reversal, nothing major certainly, and what you're getting is a little bit of profit taking. Now there's rumor mills going again that North Korea is getting ready to launch another missile. I think they have a national holiday coming up on Tuesday. Don't know if it'll be before then or not, but these rumors are coming out of Russia, I just read on the Financial Times, so we'll see if there's truth to it. You're getting a correction on the energy markets as they're shutting in both the platforms and refineries for Hurricane Nate. The gold market had a big breakdown to 1262.80 today, and then a sharp reversal from that low, up $16. Silver 50 cents off the lows. You know, maybe profit taking, maybe enough's enough. You just can't be certain with these things. When we go and we look at the monthly bar chart, and remember on the weekend edition, first I start off with the monthly chart on one of the key stock indices, then I'm going to go to the weekly charts on everything rather than the daily charts that I cover Monday through Thursday. Also, it is Columbus Day on Monday. We are still open. It's a banking holiday, not a trading holiday, so we'll be here. You can see the channel line that this market's been moving in, and that's just where you're at. You're well over the 18-month moving average of closes. You'd have to fall in this market 2,000 points in order to get down to that. Could it happen? Sure, but it's a long way off. That would be a break of, 10% or so? So it would be quite a bit. If we take a look at the December weekly area chart of closes, well, all I can call it is an upthrust. The market's going to have still the strongest close on a weekly basis today. When we look at a weekly bar chart, I've given you an idea as to where the support lines are. Sure, you could pull back over that 2,500 level, get a break here, and still challenge that upside support. But the market's looking in pretty good shape with the support on the weekly chart way higher than it is on the monthly at 2461, about 80 points or so lower. And the swing lines that make up whether you're trending or not by a simple way of saying, are you making higher highs and higher lows for an uptrend? You're in an uptrend. You've got the higher lows. I've marked them off with the arrows. You certainly got the higher highs. Away you go. And all this is taking this chart, by the way, and putting on it the swing line study. It's no more than that. When we look to see where the 18, I wish I wouldn't have said that. That's my fault, but we'll call it the 18-week moving average of closes and the 100-week. I just typed it in wrong. I'm sorry for that. This is the weekly chart, and those will be the weekly averages. You're looking pretty good there. The Bollinger Bands, you're over. Now, even though it's a weekly chart, the chart often pays attention to whether you're over or under Bollinger Bands. Only 5% of the time will you close above or below them. In order to start a trend, it's not uncommon if you had sideways action to get over them. But after this lengthy part, the market is ahead of itself as I would define it. In looking at the slow stochastics, the momentum is still to the upside. The bias is to the upside since you're over the 18-week moving average of closes, and certainly the trend is up. What more can one say? In the NASDAQ, you got up today to the upper Bollinger Band, and with that, the market basically is having a problem. You got up to 60.7150 in that Bollinger Band on the weekly chart. I said that wrong. Is 60.85. You missed it by about 13 points. Keep in the back of your mind, this has been the laggard of the indices. Yes, the market is still up, and yes, on a weekly chart, it looks great. But it fell behind the others as leadership in the industry was taken over for a short while here by the Russell. Then we saw the Dow and the mini S&Ps catch up. Talking about the Dow, you're up and over the upper Bollinger Band, as you can see. So still looking pretty good in these markets in terms of strength. The bias is up. The trend is up in this market. And on the Russell, bang. It has just been the vertical price rise in this market. It's come from 1348 to a high this week of 1517 without so much as having a week where you made a lower low. That's pretty impressive in the market. You're now going to be over this upper Bollinger Band this week. And if you go to it last week, you closed at 1493, also over it. So now you have 2 weeks over it. The week before, you weren't. You can see we're under it by 4 ticks. So 2 weeks, you're overdue for a correction coming down the road. Typically, how I use the rule of thumb on a Bollinger Band, that's these black lines, is that each bar represents one of those percentage points. It is a rule of thumb. Nobody's saying it can't go further. But I think if you go back and do your own studies, you'll find it's a pretty darn good rule of thumb. So I'm going to give the market a 3% chance of, on a weekly basis, it closing over whatever this week's upper Bollinger Band turns out to be. In the VIX, a heck of a day. If you take a look at what went on, the market went from the lower Bollinger Band and turned itself right around and rallied sharply, got as high as 1027, fell back as the market approached the upper band, and still stayed under the 18-day, and this is a daily chart, moving average of closes. Intraday, it had lost one more time its embedded reading, and it gained it back right on the close. On the 10-year notes, you've gone from an upper band to a lower band in 5 weeks. That's pretty important. You got today on the 10-year notes to about 2.4% on interest rates. You are in an area where you still have momentum pointing down. You're into support from the lower Bollinger Band, and the bias is down. In other words, the market is saying higher interest rates are coming. Today we saw wage inflation. I think it was 2.29% or so year over year as we saw the jobs data. There's a bit of concern in the market. If North Korea fires a missile, do people run back into notes and the yen and so on? But we've all been conditioned also. And what happens is North Korea fires these missiles. We know more sanctions are coming, but the duration of the safe haven effect is very short-lived. I think it would take one of those missiles, an errant landing in Japan, doing something to create more of an issue. In the dollar index on the weekly basis, you rallied up to the 18-week moving average of closes. That number is 93.95. You got to 94.10, and the market, just like it hit a brick wall, stopped at that number. Now, what you have here is the swing line pointing up, but the bias is down and momentum is turned up. So you got a market that's just finally probably going to have to consolidate the gains that it's made in some manner. At the same time, the euro currency has lost its bullish momentum. It is pointing down. It didn't quite get to its 18-week moving average of closes. It's got the swing line to the downside on the market. We'll see if it can hit that 18-week moving average soon. In the Aussie dollar, the trend is down with lower highs, lower lows. You closed under the 18-week moving average of closes, and momentum is pointing down. So this market's still very much in the bear phase, as the Canadian dollar's got a mixed picture now. You have, on a weekly basis, momentum is turned down. You can see that. You're still over the 18-week moving average, which gives you a bias to the upside, and the chart pattern is still one of higher lows and higher highs. Got a lot of things diverging here. Be careful. In the Japanese yen, the market tried to make a run for the lower Bollinger Band. It got as low as 88.28, about 30 points away from that 87.97.5. Momentum is still down. The bias is down. And you've got to take a look here because you got the 18-day average again crisscrossing the 100, pointing down. This is your resistance point on the chart, in my opinion, around the 90.30, 90.48 level. We'll see if the market does get a rally of any type, what it can do up there. In the crude oil market, you've gone, if you think about it, to the upper part of the trading range, got as high as 52.85, and you have slipped since then now approximately, what, $3 in change? So market's come down pretty good. Can it get to the 47.60 level, the 18-week average? We'll find out. Momentum has shifted. Notice how the red line is now under the blue. So it's arced back to the downside in the market. obviously when you get a hurricane, and we don't know that Nate will become one yet, but it's forecast to become one this weekend, they have shut in rig platforms in the Gulf of Mexico, and now refineries are shutting down. If you shut down a refinery, your thought goes to the fact that why do I need to buy crude oil at that point? Puts a little pressure on it. The other thinking is when you get to natural gas, what do you do at this time? Well, it's not exactly the same story, but we have a market that has suddenly got extremely narrow range within the Bollinger Bands. Remember, the Bollinger Band is that algorithm designed to keep the market trading within it, what, 95% of the time. There's another thing happening here. If you take a look at what's going on, if you start spinning around in a real tight range, that's often the prelude to a trend about to develop. Now, if you look back here, this market hasn't gone all that far in a long period of time, basically since June. So that's what I think is going on. I'd be surprised if you get under the 100-week average on a closing basis. I'm not saying it can't happen. And the reason I'd be surprised is if you've got support between these numbers of the lower band of 280 and 273. Is there a trend to trade? Unfortunately, there isn't. The swing line is up. Prices are under the 18-day average. So those two fight each other, and the momentum is pointing down. So when I put it all together, interesting time in the futures markets, and it's going to get more interesting as time goes on. What do we have taking place? And I'll be writing about all this very shortly in my research. October 18th, we've got the Chinese Party meeting for their convention where they talk about the next 5-year plan. This coming Tuesday, we have the North Koreans with one of their independence holidays coming up. We've got October 15th, if I'm right, the U.S. has to decide what do they do with Iran's certification of the deal. The president is basically tired, I think, that every 90 days he's got to certify this deal in some manner, and there's pressure on him to either get out of the deal, which our European allies will hate. What do you do with that? Stay in the deal, try to tweak it better. Why would Iran want to do that? So you've got your hands full with all this, and I'll be writing about it. And when you get all this happening, it creates market opportunity. And that's basically what trading is about, looking for opportunities, especially if you're a futures trader the way we are. So what I do is I write about it, and I put out a morning subscriber video. In that video, what happens is you get to see me review 40 charts live. I am not in the video. I talk over it. I actually have a professional mic. It's about a boom, swings down. The quality's phenomenal. I capture my screen, and I'm throwing out in and out day trade opportunities, longer-term trades I'm seeing, what events are moving the market at 8:30 in the morning. So that's 9:30 Eastern, and that's going to give you 6:30 in the morning out west. But the idea here is I do it at 8:30 because the grains have reopened in the pits, the meat markets have opened. I'm covering softs, I'm covering financial markets. If there's key reports at 7:30, I'm recapping them for you and throwing out what I think. My research, if you want to see something different, well, I recommend you take the trial. If you have gone through the trial, and many of you have, you become a subscriber to it. I think it's worth more, in my opinion, than the cup of coffee you're buying each morning, wherever you're getting that. So how do you get access to it? Give us a call. You can go to our website, sign up for it. You'll see a carousel of free offers. You can click up here at any time that you'd want. If you're watching me on YouTube, you'll see the icon. And underneath us, it says, click here for Ira's free offers. Do so, and I'll put it in your hands. I'm Ira Epstein. You have yourself a great day, and I'll talk to you all on Monday. Take care.